This is what I do to pass my prop firm evaluation accounts, and most traders do it completely wrong. I've passed multiple accounts and gotten real payouts, and I'm going to show you in this video step by step exactly how to do it. It does not take any special individual to understand these simple steps. I made a simple 3-step list here. Number 1 being understanding price action candle by candle. Number 2 is a question you ask yourself before every trade. Number 3 is fixed stop losses. So to start with number 1, I'm going to put this very simply. If you want another detailed video over this, just let me know in the comments below. Understanding price action candle by candle and waiting for the close of the candle. Biggest thing I see in traders when teaching is that people do not wait for the close of the candle. They're too impatient. Wait for every close of the candle before you assume its story. A big green candle can close red, so watch for the close of the candle. And with the higher high and higher low pattern, I'm not talking about just like this, for example, the lower low and lower high pattern here. I'm not talking about the overall, like so. I'm talking about candle by candle action here. So when you're clearly in a downtrend, and I know this sounds ridiculous, when you're clearly in a downtrend, it's going to be red candle, red candle, red candle, red candle, right? When you're clearly in an uptrend, it's going to be green candle, green candle, green candle, right? Makes sense? So what you should be watching for while you're in a trade is candle by candle actions. And that is if candle can break its previous candle's high and close above it, right? The close is the most important because candles are open ranges until they close. And then when they close, it'll tell us the story, whether it grew and could maintain that new high or whether it was pulling back because it didn't like to accept price at the new high. So I don't go too in depth with one step here. You guys can just join my free live streams every Tuesday in the Discord. I'll show you live examples of that. Number 2 is the question you should ask yourself before every trade is where are we coming from and where are we going? So at the very basic level of understanding, just get your support and resistance. Simple support and resistance. I draw these using the body of the candles, not the wicks. Close price is important. Your support and resistance, right? So if you're coming off of the resistance and you're candle by candle making red candle, green candle, red candle, breaking the previous lows, right? Candle by candle, lower low, lower high. Then you're coming from the resistance and you're only one direction going to the support, right? So vice versa, if it hits support and it starts closing green, right? It's not confirmed bounce yet, but when a candle breaks its previous green candle's high that closed at that support level, that's a valid bounce. It's now making a higher high, higher low pattern on a micro scale, candle by candle. Now you can tell yourself that you're coming from support and heading to resistance. This will allow you to have a scalping bias where you now know you can only focus on longs every single time a red candle pulls back to its moving average or every time a red candle pulls back to blah, 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 to a good deal zone. Then you know to buy longs there. Don't focus on buying the shorts if you're heading to a resistance. You only want the good deal on the pullbacks for the longs. This alone will dramatically increase your profitable rate. Step number 3 is a fixed stop loss. I have a fixed stop loss of $150. It's the max I can lose in a position, and that usually doesn't hit. That's only for if random news happens or if a volatile candle happens, which sometimes does. And that's just for one contract, by the way. So one contract on NQ, I have a fixed $150 stop loss, but also make sure you're buying at a good deal. Remember how I said candle by candle? If it's red and it's trending down and it's making lower lows and lower highs. So if you're going to use candlesticks, please understand actually how to use them and how to properly wait for the close of the candle. Again, if you want to see this live, join the Discord and I'll show you how I do it every day. I pass these evaluation accounts time after time. I have multiple funded accounts that I get daily payouts on with Take Profit Trader. And before I hop off here, I want to give you a quick tip for staying through the whole video. Make sure that when you're using indicators, you're not taking entries on them. They're only for exits because it's indicating a potential reversal. It's an exit, not an entry. What you do instead is when RSI is overbought or when EMA is overextended, whatever it is, the key is to watch price action. What is price action telling you when that current event is happening on the indicator? So if it is above the EMA, is it making higher highs, higher lows above the EMA? Or is it struggling to make higher highs, higher lows above the EMA and letting you know it doesn't want to trade up there? It's a good deal for shorts. Or letting you know price is accepted and it's actively trading above the EMA. So it's the question you ask yourself. Is RSI extremely overbought? Should I short it? Let's look at price action. Is price action making higher highs, higher lows while RSI is overbought? Because if so, it's telling you bulls are in control. If not, and it's struggling or it's having dramatic pullbacks or pin bar candlesticks, then it's probably signaling you that there's FOMO buying in that area and it could be a time to fade it. But I hope you guys enjoyed this short video. If you want a more in-depth video, please comment down below. My Discord will be in the description as well if you want to come by and say hey. And I appreciate you guys for watching this thing. I hope you guys got some value out of it, and I will see you in the next video.